Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Michael Kamerman, CEO of Skillings, to discuss key retail trading industry developments, what it means for traders, challenges for brokers, and aligning all of those priorities. Michael, it's great to meet with you. Welcome to Trade Talks.
Thank you very much for having me.
Let's kick it off and talk about the traders. What key messages do you think most novice traders need to know but are not told?
It's an interesting question. I think there's two things that they're not told usually. There's a lot of information and education about trading right now, but the two things that don't come up is, number one is find the right product for you. So everybody talks about Bitcoin, everybody talks about Tesla and all the tech stocks right now, and those are great and they're fun to follow, but may not necessarily be the right product for you. If you can't trade when the US stock market is open, or you don't understand the differences between Bitcoin and Bitcoin Cash, then those products may not be right. So I think as a trader, it's advantageous to find the products that fit you best in terms of volatility, in terms of price, in terms of times of day you can trade, and so on and so forth. The other thing that I think is only learned over time in trading experience, and that people often aren't told about in the beginning, is just the emotions of trading. So whether you like it or not, there's a lot of emotions involved in trading. So if you place your first trade and it gets stopped out, you don't understand why, that's an emotional experience. You're feeling your anger about something, or a bunch of trades go in your favor and you start to feel another emotion, which is greed. So I think it's very important for new traders to really understand their emotions as well.
And following along, what would you say are the biggest challenges for new brokers, and how could Skillings address that for their clients?
For new brokers, I mean, it's a great time to work at a brokerage right now. It's very exciting, and it's obviously a hot topic to discuss. But it's a great time to be at a broker, but it's a difficult time to start a brokerage. Some of the challenges traditionally are the licenses and regulations. It's a highly regulated industry, and rightfully so, but it takes time to obtain these licenses. Banking and payments is always an evolving landscape that you have to be privy to, and setting up those relationships involves a lot of time and a lot of trust. Those things don't happen quickly. And then I think as of late, one of the most common challenges is just differentiating yourself. There's a lot of noise. There's a lot of brokers right now, and especially in our industry, a lot of them offer a ubiquitous platform, and everybody markets low spreads, low costs, and excellent customer service. Those things really aren't going to cut it if you want to be a major player in the industry. So those are some of the bigger challenges.
And how do you see the industry developing in 2021, and what changes do you envision?
I think the industry is going to go through a lot of changes. I think that there are some things that I feel will develop this year, trends that I think are going to continue to play out. So I follow personally with a lot of interest, the red hot IPO market. I think that there's a lot of private equity swirling around looking for the next big company, the next Robin Hood. And so I think that there's going to be a lot of interesting developments in the pre-IPO industry. I think there's going to be more trading and investing access to these companies. And so I think for traders, that'll be exciting because there may be opportunities to trade these companies pre-IPO. But if not, I think the trading activity in them post-IPO will just increase. So I'm watching a lot of developments in that space just for my own personal interest. I think another development in our industry will be FX trading. So believe it or not, FX trading has fallen out of favor a little bit. It's not really in vogue like it used to be. Right now, everybody talks about crypto and tech stocks, but I think FX trading will come back in vogue in the latter part of 2021. The macroeconomic conditions will be right. I think central bankers will have to capitulate and eventually raise rates. And when they do, that's what moves currencies, interest rates. And so I think that'll create some good trading conditions for our customers.
And what are Skillings priorities in 2021 specific to you?
So for Skillings priorities, we have a lot of priorities. We're a very ambitious company, but we've got two major ones right now. So one is to make it as easy as possible for the B2C customers and the B2B customers to work with us. So because of the boom in online trading, there has been a lot of new traders coming to the market, but also just new trading related businesses. So for the B2C crowd, we want to make it as easy as possible to open an account, but also just as compliant as ever. So we're spending a lot of time and money on revamping that experience for the B2C crowd. For the B2B crowd, we want to be a very valuable partner for them. We're developing new tools so that they have unparalleled level of transparency and access to information about their customers. We live in a data age right now where everybody demands data, and we feel like there's a bit of a gap in the market for the B2C crowd on the provision of data about their customers to them. So that's what we're working on right now.
And Michael, I'd like to wrap with an existential question that the industry and financial media is obsessing over. Does retail trading have a bad reputation following the platforms that had outages and there was no access to accounts or certain stocks? How does it recover? Because it's the chicken before the egg argument. Do we overregulate to protect investors from themselves? Or is that being condescending to investors that should have access to the market? There's a lot of if and or situations here.
I mean, I don't think that the industry has a bad reputation at this point. I feel like, if anything, the position for retail traders has only improved. They now have a seat at the table. There's a lot of arguments out there and a lot of data that would show that the percentage of trading volume coming from retail traders is now increasing to the point where they're getting the attention they finally deserve. So I don't think that there's a reputational damage to make up for. I feel like their position will only get stronger. And a lot of times companies like Robinhood have been coming up, and the issues that they had, if you can call it issues, they're not perfect, but I don't think any broker or any company for that matter is. And I think a lot of companies would love to have the growth that they experienced. And so I don't think there's reputational damage done. I think companies like Robinhood and all the other nascent fintech firms that have had a lot of growth, they learned a lot through this process. There were some teething issues, but I think they'll be fine in the long run.
Right. And to your point, Michael, I mean, every asset class, every industry along the way has learned this process around market structure. So this could potentially just be another step in the timeline. So that is encouraging to hear. Thank you for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.